Good morning, everyone, and welcome to the European crossover webinar. And we saw some nice movements over in the Asian session. Actually, they'd even developed earlier. Obviously, we saw the S&P make quite the run in here, and we're going to move in, just quickly move into the S&P. We had been talking yesterday about this area here. Okay, this 2814, we'll pull this back just a bit. We talked about this 2814 yesterday, confluencing with the 2807, which is 78%. We really don't cover TSB too much. We just had to be covered it as a sidebar, so to speak, when we're referencing the dollar yen. And if the dollar yen could break above 1103, which it did break above 1103, but we saw here, we were talking about this 2814. Actually, I posted in the room, I don't know if anybody got short with me. I got short actually 2812 and a half. And should have hung on. We had a pretty good dip. Obviously, on a daily, you don't see it is impacted, but here on the 2-hour, we saw a nice little pullback well into Asia, and we saw a nice reaction. I mentioned earlier some nice moves in Asia in the dollar yen. Look at the dollar yen. We got up to around 1120. I thought we might make it even up to 1144. Pulled back down to I think the 1077, I believe it was. Also saw the Aussie Yen going and pull back rather nicely also here. But we're going to get to those. Another mover here has been also the cable. We'd done the analysis over the weekend, and coming into Monday, we talked about how this thing was really trying to move higher now, as it meant we tested the 50% back. We were clipping along. We had the 78%. Well, I did some work over the night, and it really wasn't anything big. I just put in here that I thought this would be our target for today, 3166, and the cable is clipping along rather nicely. It's taking out the 78%. We know how cable likes the 78%, but we had this confluence here with the 3137. This was our level for yesterday, the 3137. Oh, no, I think I might have just kept it to 78%. We'll see. But obviously, just off about 14 pips. But we did make a move hard, but I think right here is that we can take a break here. And actually, we've already made it up in here to, what is it, 3161, almost 3162, and I'm looking at 3166 as our target level. Or that's what I posted in the basic technical. I didn't do a whole lot with the basic technical because we'd already done a lot of work over the weekend. It was just Monday, probably have a little bit for the postings as we do into Asia, for later on this evening. But this is the one I was looking at, 3166. When we take a look at the euro, wow, this thing is really just stuck in neutral. Let's go and quickly move into the euro. We are not making any move whatsoever here with the euro. I thought we were going to move higher. I'd actually gotten long the euro, and I was kind of like just stuck. I was able to get out late in the session with, I think it was like a 2-pip or a 3-pip gain. I thought we were going to go in and crack. When the S&Ps, when we came in the morning, I thought the S&Ps would push higher. They did push higher. And then I thought the euro would really just start to take off. And I thought we might make a move. We might even make a move towards that 1389. But lo and behold, this thing was just stuck in neutral and did a whole bunch of nothing. And, I almost bailed on that thing. And but I said, I'm just going to go and hang on no matter what, only because I thought the dollar index was going to pair back. And we actually came back a little bit. And once again, I was able to bail out for about, I think it was 3 pips or something. It was rather pitiful, but it was a good day with what I did with the S&Ps. I never did jump in on the dollar yen, so I was really disappointed with that. So I kind of made a screw up here with the dollar yen, because when you look here on the dollar yen here, take a look at here on a 30-minute. This is a nice little gravestone doji here on the 30-minute. Look at that. I mean, the body could be a little bit lower to make it almost flat, but this was nice. But I kept thinking, well, they might make that move to 1144, but the S&Ps had already been pulling back, so this is probably a good, nice little risk reward. But once again, like I said, we actually haven't moved very much since then. But I was looking for this thing to break a little bit higher and then to fade. But I thought we might be able to push a little bit higher. We also saw a pretty good, nice movement here in the Aussie Yen. This is really nice. Look how we really dipped down. This is some good support here. Actually, I was looking to try and buy this at Asia at 79.18. It didn't quite dip. Now we got there, and we're just kind of sitting in neutral for right now. But you can see here we just exceeded 38%. We had some support at 79.32, and I posted that. But if you look here, here's the 78.22 to 38%. I thought we might dip in Asia real quick. I was trying to see if I could even pick up the dollar yen at 67. Let me pull this back here, and I was going to try and grab this at 78.18. Now we're finally starting to drip a little bit lower. We got here, but this is a good little area here of support, 78.18 on the Aussie Yen. Another good mover overnight was obviously a big mover. Finally, was the dollar CAD. And you can see this moving here. Well, we're going to have some resistance here. Our resistance, I can tell you right now, is going to be 32.26 is what I'm looking at. You see right there? Right there. See that? Actually, it's actually a little bit higher. We've already made it. It's actually 32.18. Not sure I came up with the 32.26. I was looking at it early, but that right there. You see that? 32.18. And we've just about nudged it to almost to the pip. So this is a pretty good area right there, 32.18. I think the 32.26, oh, I know where I got that from. Let's take a look at this real quick. I think the 32.26 was going to be 50% of the most recent range. I think that's where I got that from. Yeah, sure enough, 32.27. Oh, and you see right here. And let's pull this back in here. You see that 32.26, call it 32.27, and you can see these touches right here. 32.18 right there, you see right there is very good right there, but if we can get one more nudge up in here, and we've already seen crude come off quite a bit, that 32.27 really looks very enticing here. Speaking of which, we certainly finally saw this crude go and pull back. We've been talking about that 57.08. We've kept that as our 57.18. We've kept that as our overall target level on a daily basis from a daily area. But we cautioned yesterday, be careful with this, and we finally did relent. Although obviously, Trump had his tweets, so that certainly had its own impact. But the market was very overbought to start with, and it just didn't seem to want to get back. It finally did, but here's that 57.18 here. We had that shown on the daily. With that, let's go on and let's take a look here on the news front, or economic news. We did have the German consumer sentiment came in at 10.8. Reuters poll, pretty much all even, right across the board. Look at that. And French consumer confidence, a little bit of a steady gain, a little bit of a gain here. As we move into the States, so we do have building permits, nothing until then. We may kind of stay relatively quiet, I'm thinking, until we get into the States. We'll see. And housing starts, both at 8:30. And then we don't have anything until, let's see here, we do have Richmond Fed. That's going to be at 10 a.m. Eastern. And Dallas Fed Services Index. We did have Dallas Manufacturing yesterday, and we also have API, but that's after the close. So we have at 8:30 Eastern building permits and housing starts. And let's go in and take a look at the morning bid. Signs of major shifts in the Brexit debate emerged late yesterday, with Labour leader Jeremy Corbyn moving to support a second referendum, and media reports that PMA will today discuss with their cabinet taking a no-deal option off the table. In both cases, the two main protagonists have been dragged kicking and screaming to such U-turns by party allies threatening revolt. The European Union has made it pretty clear to me that it sees a delay to Brexit as the only sensible path given the uncertainty. However, it would not want to agree to a short one if simply means the impasse is extended for a few weeks. May is due to speak in Parliament shortly after midday. The question be how explicitly she rules out a no-deal outcome. If she does so at all, The Labour movement, meanwhile, raises a totally separate question of whether Brexit will actually happen. It will give heart to campaigners for a second referendum, but they also know that for a time being at least, there does not appear to be a majority in the parliament for calling one. While the German economy is nearly skirted recession, its consumers remain relatively upbeat, according to the GfK survey this morning. That suggests the household spending can support further economic growth in the first quarter of this year. Separately, French consumer confidence jumped in Friday as fears over the joblessness subsided. The reading of the 95 point marks the highest level for the consumer confidence index since October, which is a month before France's Yellow Vest protesters started to wage weekly demonstrations against high living costs and Emmanuel Macron's policies. Sterling exchange is charged higher overnight, and so reports UK PMA as soon as Tuesday is set to announce a delay in Brexit beyond the scheduled March 29 deadline, and the main UK opposition Labour Party moved to back a single referendum on the issue. The pound has gained as much as 7/10 against the euro and the dollar since the close on Monday, reaching its highest in a month. The first jump came about 2200 GMT on Monday, after the first reports made faced with threats of ministerial resignations unless she removes a no-deal Brexit from the government list of options. That will play for more time and announce that she will seek a delay in Brexit after a cabinet meeting later this morning. Sterling add to those gains first thing Tuesday, with FTSE and stock futures getting hit by the pound's rise. May's de facto deputy David Lidington said on Tuesday that a delay will only defer difficult parliamentary decisions, and he hoped a meaningful vote on the Brexit deal on the table could happen as soon as next week. Elsewhere, world market enthusiasm about an imminent trade deal between the U.S. and China cooled somewhat overnight, even though U.S. President Trump indicated increases in tariffs could be postponed beyond March 1st. Wall Street's closed mostly flat on Monday, with U.S. and European Union futures both lower the first thing today. Shanghai stocks and the offshore yuan gave up some of Monday's surge in both. Let's take a look here. Beyond Brexit, the big set of piece today will be Fed Chair Jerome Powell's Senate testimony. Markets have now priced the Fed's pause and will be on the tenterhooks to see whether Powell feels a resumption of interest rate rises later in the year is possible, and how soon Fed policymakers will discuss ending the central bank's balance sheet rundown. The dollar index was already steady to a touch lower first thing, with euro dollar lower too. Currency volatility subsided over the past few weeks as the Fed and other central banks have leaned more dovish in the face of weakening economic soundings. The 10-year Treasury yield fell about 2 basis points overnight to 265.20. And let's see. And that's going to be it here. And we'll just quickly go through these real quick. Canadian dollar pulled back from 3-week high as oil prices slid. Let's see if there's anything of any interest here. Down on Friday, U.S. Futures Trading Commission and Reuters calculations showed that speculators cut their bearish bets on the Canadian dollar. As of February 5th, net short positions have fallen to 42,037 contracts. Australian New Zealand dollars hold gains as Sino-U.S. talks advance. Australian New Zealand dollars consolidated gains on Tuesday as signs of progress in the Sino-U.S. trade dispute were taken as a positive for the Chinese economy. President Trump said he may soon sign a deal to end a trade war with Chinese President Xi Jinping. Markets rallied after Trump said on Sunday he would delay an increase. The buoyant risk appetite and commodity prices are currently more than offsetting the domestic concerns over a subdued consumer, declining housing prices, and a cautious Reserve Bank, said Rodrigo Cottrell, FX strategist at National Australia Bank. Our fair value model has continued to tick higher, suggesting a move above 72 cents looks reasonable from a fundamental basis. Earlier this month, the Reserve Bank of Australia took a dovish turn on policy, saying economic risks were now more balanced, and the next move in interest rates might be a cut than a hike. Let's see. The outlook for the economy could come clear over the next week or so, with the data on fourth quarter business investments, government spending, current account, and gross domestic product all due. And on to cable, we've already covered this. Indeed, one would argue that delaying to May, for example, the odds of the hard Brexit rise further, as at the point of any further delay would mean the UK would have to stay in without any EU parliamentary representation. The Sun newspaper reported that May will propose formally ruling out a no-deal Brexit. Investors are looking at the Federal Reserve for the latest view of the economy and monetary policy. That's why I think we may stay slow until we get to U.S. session. Powell and other Fed policymakers have indicated they favor patience before raising key lending rates again due to recent signs of slowing economic growth. The yen rose 0.25% to 1080 per dollar as investors sought the perceived safety of the Japanese after the S&P equity futures slipped in Asian trading. We talked about we saw some nice moves in Asia. Now the S&P was already pulling back, although it added to those drops. Doggone, I should have stayed short. I had a pretty nice fill, but I didn't want to hang around for too long. But it did okay there. Now, lastly, we'll just finish up with the dollar near 1-week lows before the Fed testimony. The dollar held near a 1-week low against its rivals on Tuesday as currency markets waited to the testimony of Fed Chair Jerome Powell that might give a further boost to risk appetite. Risky assets had a strong start to the week with the Chinese currency hitting a 7-month high after President Trump confirmed he would delay a planned hike in tariffs. Powell's comments, Powell will testify before the Senate Banking Committee later on Tuesday, the first day of a 2-day appearance before lawmakers. Market watchers expect him to underline the Fed's sensitivity to asset prices. Powell's comments should bolster an already approving market for risk appetite and remain constructive on risk, said Manuel Oliveri. Powell and other policymakers have indicated they favor patience before raising key lending rates. Proving risk appetite was more evident in the British pound after the Bloomberg News reported that Prime Minister May was considering delaying the March 29 deadline for the UK's exit. With that, we'll go on and start on our analysis. And crude's coming off from these lows a little bit here, so it's keeping the cat in check, but that 32.26 looks pretty good. It's a 50%, and there's some resistance, and we have some at 18, but I like that 32.26. We'll go on and move into the bias chart. Now looking at the euro, oh my goodness gracious, this thing is not moving for anything. You know, depending on how we go with Chairman Powell's testimony, look at this thing. This thing is just pathetic. It's just stuck. And you know what? I think this might be the, we'll see what happens, but I don't know. You get a funny take. Is this might be the one where it moves and nobody really cares. I think we're at a point now that it's just like it feels like they're not participating. Like as if even if we take off, it's on. I mean, I guess we go higher because the euro comprises 50. You know, I saw 56.4. It's always been 56.4, and I saw something the other day saying about 58, and I was thinking that was wrong. But anyway, that being said, obviously if the dollar index pairs back, and we're thinking that, remember that our Asian analysis or the analysis we had at the beginning of the week, we think we're going to eventually get down to 96.08. Maybe we do after Chairman Powell's testimony, but I mean, in time that might kick us off. But I just, I think, I don't know about this euro. I know I'm not going to be participating in it at all. I might say that and then turn around and jump right in, but I think I can find other better pairs to go on and work with than this thing. It's just not, it doesn't want to go anywhere. It might hit a spike and jump up real quick, but how many times has this thing, been the boy that cried wolf? So for the bias chart resistance, we'll say 1392 because it's standing right there. And for support, we'll just move it right here at 1327. We'll keep it pretty tight. Let's go and move into cable. Cable's an interesting one because maybe we do get an extra little bit of juice here. Obviously, with May talking, we might even end up getting a little extra scoot here. I've got 31.66. That's what I posted. It's not much higher. We've already had a pretty good little run off of here. And you know how cable is. You can make the case right here at 31.89 if they make that little extra stretch right there at 31. Actually, it's 31.92, 31.91. I'm just going to go with the technicals. I mean, obviously, if May makes her case, you could really pop up. But the real resistance for right now, I'm going to go with this 31.66. That's what I posted in Asia. And there's always some kind of fireworks coming out with this Brexit where it can cause it to push even further. But I like that for the resistance right there, 31.66. Support. I'm looking here at 30.75. We can also take a look here on a 30-minute. You see all these touches coming across. And we're going to go with 30.76 for support here if we do get a dip back. So let's go and take a look at the Aussie dollar. We're actually pairing back here in the Aussie dollar from this area. We'll take a look. We had 71.35. We had a nice little run here. Obviously, the Trump indicating that he was going to go on and delay the tariffs, and they're clipping along with their moving. Certainly added a little extra, and so we've got that extra move here. But we're starting to fade back as we've also seen U.S. equities pair back, so we're giving back some of these gains in here. Resistance, well, that's pretty clear where resistance is right now. We thought if we jumped up here even higher for good news here, but the resistance is going to come in right there at 71.75 for right now. And I think I'm not sure for how much if we can go on and pair back. They were saying that we won't be getting any real, significant economic news until next week. As we start to look at fourth quarter, we're probably not too far away from some type of deal. The actual deal itself between U.S. and China, that may keep this thing from sliding very much and really open the door as if we do get a deal, we'll probably see a quick jump up here in the Aussie dollar. I know Blake's been talking about that for some time. Support then here on the Aussie dollar. You can see the touches coming on, and I can see it pairing back just a bit in here. It's going to come in right there at 71.18. 71.18 if we go and pair back. I think we'll kind of hold in here in this area, but if we do go and try and give it some of those gains, I think we can pull back as far as 71.18. Until we get past this US China, there'll be a little bit of a bid underneath. And moving into the dollar Swissy. We're staying relatively quiet here in the dollar Swiss, and once we get past Chairman Powell's testimony, I think we could slide back. And I think we actually had this targeted down here at 99.54. I don't know why this is coming up this way, because I remember us mentioning, we'll see here. But I think that's what we want to look for, is this 99.54. Yeah, no, this is wrong, because I had the remember we talked about the dollar MEX. I don't know why this is coming up like this. We talked about the dollar MEX and going down to the 1905. So I don't know why they did not save that here. That I know for sure here. Or we talked about, I think we had 20 on the dollar MEX. Because I restart my system every night, and I guess when I pulled this up, it didn't save it here. So I'll go in and check yesterday's and get those updated. But I know we had 99.53 because we talked about not being caught with your pants down, because I thought we'll eventually make it down here to the 38%. As far as the upside, I remember we talked about par 21. Remember that? And let's move into the dollar CAD. Well, a nice rebound off these lows here on the dollar CAD, and certainly it was assisted by the pullback we saw in the crude oil. And we're talking about here at 32.27 here. Now, we do have 32.18, but I like this 32.27 on the 50% here. You can see here some nice touches coming across. So our resistance is going to be 32.27. And support is going to come in, let's call it right there, 31.74, 31.74 for support. Now let's go into the dollar peso. That's why I know that that's wrong, because on the dollar peso, remember we talked about this. Let me move this over here. You remember we talked about this little zone here, and our work had said that analysis that we would dip into the 50. Remember we even talked about the 50% back, which gave us, like, I think it was 1907.8 or something like that. But we even got further, and we even talked about, maybe we talked about this zone here, and I said, you can make the case that maybe it's down here, and certainly that's exactly where they went to, that bottom portion of that zone. So let's right there, which is where they went to, the lower part of the zone. But boy, did we have a furious rally coming all the way back up. Resistance now here on the dollar peso. Support's going to come in right there. I'm not sure if we'll make it back here for right now, but that's going to be 19.12.7. We may even have to move that a little bit higher for today. It doesn't look like it wants to come back either. And it's 19.13.4. And I'm not even sure if it'll come back there. There's going to be resistance 19.19.5. Well, we saw the pretty good pullback here in crude oil. One of the things that we'd been talking about, we even warned about that yesterday, but obviously I think Trump's little tweet, I think that it was already open to moving lower, but that certainly put the match inside the shack with the gas can. But we've been talking about this 57.18. And really opened the door for us to really rotate lower, especially after the S&Ps were already pulling back. So that just added more fuel to the fire, so to speak. Well, I think after a pullback after this, and people probably thinking, whoa, you know what, maybe we did come too far. So any type of move back, I think, is going to be, people be quick to get out of it. And, well, we can take a look at a fib. And I like this 38% back. Right there. 55.78. 55.78. Because that comes in right at the bottom part of this area right in here. So I like that 55.78 for resistance. Support, we had this pivot here before, And that's where they came down to. We're going to actually keep this here for support right here, which is not keep it. It's not that we had it listed before, but we had this pivot in here before. It's going to be 54.71. You can see a nice little rally here. If let's say with Powell gives his testimony, and I see a little bit of risk on, you can see a bit of a rebound, but I think they'll use that rebound to go in and exit. A secondary resistance was coming right there at 56.16, but yeah, I think that once you try and come back up here, people will be more than happy to go in and exit any longs here. And certainly the momentum's changed. Look how good this thing has been on the momentum. Look here. These moves stay a long time, and boy, the momentum has surely changed on this now. Well, we saw some nice action here in the dollar yen. We were talking about the pivot where they would really start to accelerate up would be 1103. I knew there was some resistance we had at 1095, but 1103 was going to go and ignite it. That would, once you got past 1103, then you could really take off. Well, we made a pretty good run. We got up here to, what was it, 1123. I thought we might make a move up to 1144. 1135 is key on the daily. But we since did go and come back. We came back. As the S&Ps came off. We saw a nice little pullback here in the S&Ps. I mean, it continued in Asia, and that really got this dollar yen clipping along. So we did go in and break below. So probably anybody that got stopped out is probably upset that they did get stopped out, or actually looking for opportunities to get back in, saying, well, you know what, this S&P is not coming back up, and if it does come back up, this is going to be a great selling opportunity. You have to put yourself in that mindset of trying to look how someone else may see it. So I think it goes back to the same old thing. It's 1103, and we're going to go and stay with 1103. That probably will be here around this 1095ish, but any moves around this 1103, I bet you'll have people saying, you know what, I'll take that other side of the trade. Heck yeah, and I'll ride it on up to 1140 or whatever if I have to. I think we'll eventually go lower. I'm thinking that would be the mindset. So we're going to go with 1103 here as resistance. Doesn't mean it'll make it all the way back up there, but if Powell is with the softer sense, we might get a real quick jump up in S&Ps that may drag us up here to challenge 1103, and then as the market may start to tire, looking further out, then we could see the dollar yen work lower. Then you have to take in consideration what the dollar's reaction will be then if Powell offers a softer stance. Now, as far as support, initial support's going to be right there, 1066. 1066. Now we had a pretty good run up here in the Aussie Yen, and we gave up a pretty good little chunk of change right here. This is actually some good support here, the 79.18. I was hoping that they're going to make a run down there in Asia, and they finally just now did it, but things going to probably stay relatively quiet until we get with Powell. So on the upside, actually I like this area coming in right here. 79.41 will give just a little bit of extra room. We'll call it 79.44 for resistance. I'm kind of down. We make this move up in here. Maybe if the S&Ps take off, we can try and challenge up here towards this 56. But right there, we'll call it right there, 79.48. 79.48 on the upside. And you can see that comes in right there across these touches here. Right there. You would think if we got a sharp rebound in S&Ps that we may see a correspondingly jump here, but a corresponding jump. But I'm thinking that if it makes a rally up here, they're gonna try and keep a lid on this thing, at least on this Aussie Yen. Support, well, we got support right now at the 79.18, but if we do take a dip, I'm gonna go with the 50% right here, 79.05. 79.05 for support. Now let's go move into the cash dollar index. I put in this channel because I thought that we're gonna eventually come down here to the 96.08, and I think that's going to be the case. I want to remove this. I actually just had it there for just to point out where I thought we were going to head to, which is 96.08, and I think that that's eventually we're going to go to. We know the significance of this pivot here at 96.08. If Powell is softer, which we would think is going to be the case, then we should go on to make that dip down here towards 96.08. We're going to have that and I think we did have that already, but like I said, some of these things got messed up in here, but we're going to go on and go with 96.08 for support. And resistance is right there. 96.63. You can see it coming right across here. 96.63. You can see here that we've pretty much maintained this, as we've broken lower here, we're just not able to get these exponential moving averages to cross back up on the upside. So it looks like we need to work lower before we can get this market to balance itself out. We may see a decent bounce here from 08, but we shall see, because Powell just may kick this off to get things going a little bit softer here in the cash dollar index, but we shall see. That takes us right to the gold market. And after a pullback here at this 1341, we've stayed kind of quiet here. Look on the daily, we had a little bit of a Greystone doji. The wick could be a little bit longer in the body, just a little bit lower here, but we've had such a run. And one of the things I was mentioning is we haven't had, I think that there's the opportunity for a good little pullback because we haven't had any value buying. It certainly looks like we're starting to see something like a little head and shoulders here, but we haven't had any value, haven't had the opportunity to have value buying because we haven't dipped far enough. So I think that the stops are relatively tight and we could come in somewhat lower out of nowhere. But if Powell is softer, that really opens the door for us to move up a little bit higher. So let's see how this market reacts in and of itself over the next, few days. But be suspect that once again, just like the way the oil didn't give an opportunity, same thing here with gold. Now, once again, if we start to see a slide in equities, that'll probably, put a little bit of an extra little bit under gold. But that being said, we've come a long ways with nary a pullback. So no one's had an opportunity to buy and say, oh, well, I'm long from here and I'm letting it ride out. These stops are probably relatively tight, but we'll have to see if we get something to a catalyst to go on and yank us down. For right now, the resistance is going to be 1334 and resistance support is going to be 1315. Getting the euro just bidding up just a little bit here. Look at cable here. Look at that. We're right there at that 31.67 here. Well, it's 31.66. You see that? We do have that marked off as our resistance. We're still pushing up a little bit higher here. But obviously today's a key day. We could see a lot of things happen. Euro's trying to push up a little bit higher here, but boy, cable is really leading the band. Dollar CAD just edging back a bit here. We're just above here on cable on our resistance here at 31.66, still marching higher. Here's that extra area right in here, which is 31.92. Just above. Watch this 31.66. Well, we finally saw the DAX kind of pairing a bit, so we'll take a look at where we stand here. That's going to be resistance. It's going to be 11,487. It's not very much higher from here. Actually, Powell comes out. Maybe we can push this a little bit higher on a softer Powell, which take us up to 11. We'll go with 11,512. 11,512. I think that would be the stretch, though. Support, looking out for tomorrow, is going to be 11,398. Now let's go move into the bun. Right there is going to be resistance here. If we can, it's going to be a tough time to get beyond this, which is 66.49. And this is pretty clear for right now. And 66.27. We're bracketed in. And 66.49. And that completes the bias chart. We may not see a whole lot of movement, although we are seeing it right here with the cable. But until we get past Chairman Powell, but obviously some big news today in the cable. So I'll get the bias chart posted in the room. And thanks for joining us here on the European Crossover webinar.